We have to talk markets, we have to talk women, we have to talk everything. Alli McCartney is here with us right now, Managing Director for UBS. $1.5 billion under management. Holy Toledo, with a mere 60 families.
Yeah.
Alli, holy heck.
Yeah, I've been busy.
Really?
Yes.
But there's a lot of money out there, isn't there still? So, and these people, and actually I feel like people like you have more pulse on the market than most because this is a big chunk of change. And these people,
we see it a lot.
these people care. They worry.
Yep.
So where are we in the economy right now?
Oh, I
know.
think, that's the question. So the issue is, and we actually just have, UBS has an investor report out where we went to business owners in the US and we went to high net worth investors. And that was actually people that have about $1 million to invest in the markets. And people feel good, right? I mean, there are three things that you want to have happening in the market to feel like we have a continued expansion. That's consumer spending, which we're seeing. That's corporate spending, which is a result of repatriation, cash on balance sheets, we're seeing a ton of. And then fiscal spending, which we've been promised through what we see happening in Washington and infrastructure. We are, the good bad news is we are in the second longest expansionary period since the Second World War. And we're pretty close to it being the first longest ever. We're about 113 months in. And that feels heavy, right? We have had, since the financial crisis, we have had so much, we've just gotten used to an up beta market. Everybody still sort of understands how that felt, but people are really feeling good. People are investing. But, we are in mid to late stage, maybe even late stage, right? And so it's not gonna last forever. But there have been, you look at Australia, they've had sort of a 25-year bull market. So none of this is unheard of, but especially with all the rhetoric that we're hearing right now about trade and sort of the views that people have on what's happening in Washington, it really, really does feel heavy. But what our Investor Watch has told us is the same thing that my clients are telling me, which is that it's not a total risk on and people are looking to see, but that people feel good. People are staying invested. The investors we surveyed, about 60% are staying invested as they are. About 18% are adding to that. The number of people who are taking away is much, much less, and that's taking away from an investment perspective, and that's also taking away if they're business owners and they're actually trying to decelerate their own growth. But in general, things are moving, and in the last year of a bull market, this is something a lot of people don't know, when people want to sort of be more complacent and take a little bit of risk off, you tend to have a 22% equity market performance in the last year of a bull market. So we don't want our clients to miss that. And so what we're trying to do is figure out ways to maybe provide a little cushion on the downside, and that's whether that's buying protection in the form of optionality. That's whether we're doing it through structured notes, where you change a little bit of the optics and your relationship with the upside for the downside. Depending on who and what you are, that could be hedge funds looking for non-correlated assets that tend to zig when other things zag. Or just taking some of that money that you have been either waiting to put into the market or that's been sitting in short-term fixed income and really going into 10-year treasuries and just sort of waiting and seeing what's happening with the yield curve.
Is the opportunity in the US or is it overseas?
The answer is both. The answer is both. The opportunity is most definitely still in the US. Again, being 10 years in, not everybody feels like that.
Right.
I think one of the biggest, heaviest things that we're seeing is that we think this is a risk-on global market, but because of both the trade issues that we see coming up and the lack of momentum that's been coming out of, let's say, Europe and China in terms of reporting, people are feeling like they may be further behind the US than we actually think. So, part of what we truly believe at UBS, and as an investor that works with families like this as well, is they've taken a lot of risk in their life to make money. And we're here to protect that wealth and grow it in a really thoughtful, strategic way. And, and people feel good about what's going on.
So do you worry about this tariff talk? Because you said rhetoric, a lot of it is rhetoric.
Yeah.
I think a lot of people feel like it's rhetoric.
It is heavy, and it's what everybody wants to talk to. And I went on TV about 7 weeks ago, and it was sort of the very beginning of it, and everybody.
And it was Armageddon back then.
It was totally Armageddon, and stocks were going crazy, and people were, the Muni curve shifted in a moment.
Right.
Everybody was absolutely risk off, and in a way, it's actually gotten more productive right now. So I think, again, what our clients tell us and what the Investor Watch for both business owners and clients tell us is people do not think that China is behaving in a responsible way, and they think that it is a real risk. People out there are supportive of these tariffs.
Well,
they're concerned. They're concerned about the way it's going to affect their input prices.
Of course.
They're concerned about the way it's going to affect the supply chain, but people seem relatively supportive of what the administration is doing. Now, the fact that it is extended from China, which is a market that we export $32 billion in the first quarter, to Mexico. Now, Mexico is something that we are scared about, right? That's 4.5 times the export market that China is. It's super proximate. We haven't really moved forward with it. I think the extent of the barriers that are going to curtail international trade are going to be, we're going to figure out what they are soon, but I think what we firmly believe is this rhetoric is not going anywhere.
Right.
It is here. We think there will be a negotiated solution. We think there will be a negotiated solution with the NAFTA countries, with China, with Europe. We've already seen some deceleration, not acceleration in those conversations. But this concept is here to stay, and it is giving investors pause. It's funny, US businesses seem to be really happy about it, right? Especially look at what's happened in the small caps as a result of the tax issues that they don't have to deal with,
Russell's
right?
been like doing great.
So it's here, people are ready to have things to worry about. But again, by the same token, the market is up, 5 to 6% in the time that people have been wringing their hands about what the outlook really looks like.
Well, I think it's been a lot of years that we need to address China.
Yeah.
And I think, to your point, a lot of people are starting to realize that China needs us more than we need them.
Yeah.
And someone's got to come to the table here. Something will happen.
Something will happen. And look, I mean, we talk about China, we talk about the emerging consumer, we talk about consumption-driven economies. China is going to be relevant in some way.
Absolutely.
And whether or not they're in a bear market now and how long that lasts and what's happening with yuan policy, China and India are places you cannot ignore right now. And, I know we're going to get more into some of that, but these are issues that at some point have to be dealt with. They're being dealt with in a really healthy U.S. economy with an accommodative Fed. Consumer numbers are strong. Labor market, as evidenced on Friday, super tight. There are some legitimate risks, but we feel good.
What worries you then?
What really worries me? I do get worried. I know Jamie Dimon came out the other day and talked about a 5% 10-year. I do worry about a Fed that moves too quickly. I worry about this decoupling in global growth. I worry about the U.S. being in year 10, 11, 12 of our expansionary period and really trying to figure out, if Europe with still geopolitical issues, some concerns about, negative rates in some areas, if that is slower than we need to see. And then, geopolitics is a huge one right now. I don't even know what to point to specifically, but, we have earnings per share. This is an earnings market, right? Costs are out of it. We just need to figure out how to continue that trajectory. We had, the earnings that we've seen to date in this quarter have been broad-based and strong. Last year we grew at about 12%. We're expecting we're going to grow at about 19% this year, 6%.
Crazy, right?
That's not Armageddon, right? But it's not. But again, this is not broad-based beta market anymore. We're going to be rewarding, I think, those companies and those countries that are certainly in the U.S. that are value companies that are addressing the things they need to, that are putting their cash stockpiles to work in a very productive way, that are giving back cash to their shareholders. So this is a punishing market, right? It's very binary how people react to things, and I think that we have to be careful to sort of stay on track. That is what we at UBS do. We take, for those 60 families or for all of the clients we work with, we take the emotional market timing out of it. And, we have a long-term strategic view, and then we have some short-term tactical effectuations, but we sort of have to be that reason.
Do wealthy people worry about the same things we non-wealthy people worry about?
Yeah, I think they do. It's a funny thing. There are always, rich people problems have a variety of ways that they get manifest. But yeah, when you talk about, and again, I'll go back to our pulse on the investor watch. Business owners and investors are worrying about the midterm elections. They're worrying about, trade, right? Whether we think it's a long-term technical or fundamental issue. people are concerned about it. They're concerned about
tax policy's back on the table too.
tax policy is back on the table. We were talking on the way up here about some sort of interesting things that were embedded in the tax policy about capital gains, et cetera, that haven't really been worked out. We have a number of clients, for example, who are self-employed, who have KIOs, who have this and the other. It's not clear if you're a doctor or an accountant, what all of these rules mean. I mean, there's still a lot of uncertainty in the market.
Oh, as a former accountant, it drives me insane when politicians make tax policy.
Yeah.
Because yeah.
Yeah.
All right, so speaking of business owners, let's talk about what UBS has been doing for up-and-coming female entrepreneurs. Project Entrepreneur, we had the pleasure of being there last year.
Oh, that's exciting.
It's super exciting, and what I love the most about it is actionable. We were talking earlier about actionable. It's not just let's put some entrepreneurs in a room and preach to them about what they need to do. It's literally tell us what you need and we're going to help you. We'll put you in front of an attorney and marketing people. So how did you get involved?
Project Entrepreneur started, we'll have the 4th year, so it's been running about 3 years, which is about my time at UBS. And I have always been very open with my clients, with my team, with management at the firms I've worked in about how strongly I feel about women in finance and women as empowered forces of economic growth in the economy. And so to a certain extent, I just lucked into this one. But I think that, look, we've all been seeing the same sort of numbers in the wealth management industry, right? I think the first time I saw them, I want to say, was about 2010, sort of prognosticating forward about what 2020 would look like. And this concept of the extent of the investable wealth in this country that's going to be shepherded and invested by women, it's over 50%, right? And when you look at an industry that may be 5% women advisors versus an industry that's overwhelmingly, because of a lot of variables, certainly in the US economy, women having had, at this point, generations of accumulating their own wealth in the workforce, living longer than men, so standing to inherit twice, once from their parents, once from their spouses, and and then just the acuity behind it, really. So, we have to figure out a way to be relevant. Different firms are figuring out different ways to be relevant. I think UBS really thoughtfully tackled what are the issues that we're dealing with? And those issues are threefold, right? It's women as investors. How do we make women comfortable and empowered? Whether you're talking to me, whether you're talking to someone older than me, someone younger than me, a man, a woman, whether you're in Europe, whether you're in the US. How do you get more women making decisions in venture firms so that they are giving money to entrepreneurs and giving money and power and equity and tools and resources in the right way? And then, and how do you just support and empower all of us to grow together and have more women in C-suites, really, making decisions about the world? And UBS, in partnership with the lovely women, Jen and Jenny, who started Rent the Runway.
They're wonderful. They are friends of us here at thestreet.com.
They're amazing. And I think this group of people got together that decided that they wanted to figure out a way to really deliver tools, resources, and action via information, via access to other people, via teaching, via a venture program, via funding, like the whole ecosystem from beginning to end is what ultimately culminated in Project Entrepreneur. What happened in terms of my involvement was in the second year, we started to really beef up the 3-day on-site and competition that we do in New York. And they were trying to think, what is it that these women, some of whom literally have $10 an idea and a business plan, and some who are serial entrepreneurs and have real funding behind them, what do they need? Is it a networking event? Is it funding? Is it support? Is it a fan club, as I like to call it, which comes from one of my favorite clients? And it was all those things. And so how can we be the firm and how can we be the organization in Project Entrepreneur that does all of that together? And that's what Rent the Runway is. And so I was asked to teach a relationship sales class. And I thought, that's ridiculous. What I sell to 60 families or the way that I advise is so different. But we spent a lot of time together with both the founders and the people at UBS, and they said, look, these are people that have ideas and they have a very specific skill set in one area. But when you are a CEO, and especially when you're a CEO just starting out of a real startup as an entrepreneur, you are the chief marketing officer and you are the chief technology officer.
You're everything.
And
you're head of maintenance.
Exactly. So, right. I mean, you're opening
Right?
the door, you're closing the door,
Yes.
you're booking your appointments, you're
Someone's
paying your
asking
own
you
bills.
for toilet paper, like what?
And so what we really did was, I was asked to be part of this sort of board and set of teachers that spends time with the 200 women and
that's
business
so
plans that
exciting.
come. And it was one of the strangest things I've done because I really just didn't know how to be relevant given what these women are doing. But, we just stuck with sort of brass tacks and, what is it? How do I follow up? How do I keep track of new clients? How do I communicate with new clients? And it's been great. So I've been involved now for about a year and a half. I've gotten to know all the women. They are fantastic. You really just get so excited when you spend time with all of these entrepreneurs and the sort of ecosystem that's developed around it. And we've really made a great name for ourselves, not only in just putting material out there, but really being, again, like the fabric of what we're trying to change.
I was there, I felt it in the room, and I thought the coolest thing was that people were walking away with information.
Yeah.
They came away with something. Actually, I had met a woman, and I brought up the legal. She was in the legal room. She needed help writing some document, and she came out, and her answers were filled. And I think that's really cool. Not to mention it's free.
Yeah.
And then there's that. Do you find, you and I were talking earlier about PepsiCo CEO Indra Nooyi stepping down.
Yeah.
Now less women at the top.
Yeah.
In corporate America. It makes you almost wonder if women would prefer the entrepreneurial route because maybe it allows us a little bit more control over our own lives. Because we are seeing more and more women pop a shingle and start doing something that they want to do. Because really, sky's the limit right now. That generation in particular I see it with my daughter. She'll say to me, "Don't be a feminist. Stop being a feminist."
Really?
Because she doesn't see the glass ceiling. She's never heard of the darn thing.
Oh, wow.
And so I wonder if these young women with these big ideas, they want nothing to do with that.
I think it's great, but I also remember where my passion for this world of financial empowerment and women came together, and that was when I ran the managing director program at Lehman, and I'd meet with every U.S. managing director. There were about 600 of them. There were about 2.8% women, so it meant out of every 25 meetings, out of every 20 meetings, once I would walk into a woman's office.
Oh my God.
And there was something different about it, whether it was just something different in me, where I was more curious about how they got there, what they went through. But those women had a very different outlook on what it meant, the intersection between their professional career and being a woman or feminism. And that's a very different view than I have, and it's a very different view than your daughter has. And I understand that, and I think it's really healthy. I think that this sort of, what you refer to, which is this sort of big ideas and this I can do anything, is wonderful. It's awesome.
Yeah.
But I think it's overtaken a lot of things in terms of if you don't like what you see out there, and we were talking about sort of the sex appeal of finance, you can make your own track.
Yeah.
And that's great. And there is something super empowering. And I actually heard one of the Rent the Runway founders said this great thing that I think she heard from Arianna Huffington, I think, which was, people talk about being an entrepreneur as a risky thing. But this comment was like, what is less risky than investing in yourself? Like the one person that you know and you can celebrate and you can propel is yourself. So I think there's this paradigm shift coming. Yeah. I don't know how to answer this question. I travel in both socially and because I work with a lot of very senior women, both entrepreneurial and in public and private companies. And everybody does things for their own reason. Flexibility is key. The higher up you are in an organization, irrespective of how old you are, and irrespective of whether it's a tech organization or sort of an old line world organization, it is really hard to be control of your own destiny at that level. And we live in a world where everything you do and everything you see and everything your children do and everything your children see is out there for public consumption. And so there are definitely a lot of people that are opting out of this. But I think inclusivity is necessary. I don't think it's just women. I think it's, it's ages, it's people around the world, it's colors, it's religions. And whether that's, an example I gave you about one woman on the BMW development team who's a soccer mom in her free time talking about how many seats and how many cup holders there need to be, and that being a very relevant point of view that most European men in that room didn't have.
Right.
Diversity breeds variety. And what people want right now is ease and variety in the things they consume. They want everything to look and feel like them. And I think the hardest thing that we have to do for women, we have to do it in the corporate world, we have to do it in the financial world, we have to do it in the philanthropic world, is we have to find a safe space and a safe discussion. And I have had clients say that to me in over a number of different sort of things that we're talking about. And when women talk about financial services and they overwhelmingly say, it is the least female-friendly industry from both a service and a product perspective, the essence of that, the words that women use when you have that conversation is safety. I want information. I want someone to hear me. I want somebody that understands what I'm dealing with. I want somebody that explains. I want somebody that looks at me. I want to, it is all about being seen and heard and being safe and in a space where you're not being judged. And I think that's sort of the message that I take out of everything from Me Too, Time's Up, empowering women, being relevant in the financial field, being in the C-suite.
But why do you think, because, and this is a great segue to the financial advisory world.
Yeah.
Why do you think there are so few women in this industry? Because I feel like we were born to do this.
Funny. So I literally was born to do this. My
Right.
parents are shrinks and MBAs. So we talked about as a young, I used to sit and talk about why would people make a decision that they make? And I work with some of the masters of the universe, not because they're not smarter than me in terms of what to invest in, but because when they say if the market goes down 5%, put me in, and then it goes down 6%, you call them, they say, well, I think there's another 5% down. And you go, look, I know you have this discipline in your fund. I'm here to provide this discipline in
real life.
In real life.
Because it's like behavioral science.
It's behavioral science. So I think in my industry particularly, so I sort of look at finance having two sides of it. There's the private banking world, which is in theory a less scary industry to work in because you have, you take your maternity leaves, you are on salary plus bonus. It feels less intimidating when you are trying to be relevant in the world. And our world, which is, we are commission salespeople. And it has always been true in the world of working at a brokerage house that there are less women. And that has always been blamed on the concept of it's scary to be on commission. There have been a lot of things in the last number of years as it's gone from a true brokerage world to a full-fledged asset management, wealth management world that have said, well, that's not really the paradigm anymore. But there's obviously something that's
right,
still
because
there.
then how do you make the case for female hairdressers? Aren't they commission and tip based pretty much?
So.
Waitresses are typically.
Well, that's a whole nother issue that we have to get into. But yeah.
But you know what I'm saying, right?
Yeah.
So to me, I think it's just that Wall Street has just been an old boys club.
Wall Street is an old boys club. I mean, for me, that in this funny way for me, as I've gotten older and more confident, and as I've gotten to do even more interesting things in my job, the fact that it is a boys club and the fact that I have, just by definition, a different network and perspective has been hugely additive and confidence building. But when you're 25 or 30 and you're sitting on a trading floor and you look around at who's around you, and people come over for, I remember sitting on a trading floor at 30 and being asked to take appointments for the 23-year-old analyst next to me because the assumption was, so life changes, right? I actually think, and I tell anybody who will listen, I think that finance is absolutely amazing and sexy. I think that doing what I do, which used to be post 1999, 2000, not as interesting or exciting or long-term a career to people as, say, being an equity trader. It's now the opposite. Everybody wants to, work with individual investors and to be on the pulse and to own client relationships and to not be in a market that gets technologized and remediated away. I think there's nothing better for being, I mean, I literally at 22 years old was like, wait, there's something where I can get to know people, use finance, continue to work with the facilities I have for personal relationships, and someday I can have this balanced life where I can maybe work from
That's
anywhere.
super immature at 22.
I was an old soul, I think.
I was-
Or a pain in the butt.
We just to keep us honest on time, because I'm going way over now. But can you just quickly tell us how you got in?
How I got into wealth management?
Yeah.
I got fired from my first job after college. My father was really, really angry at me because it was with one of his clients.
What was it?
I was a healthcare consultant, which when I got out of school, everybody wanted to be a consultant. You know, every year there's like a buzzword.
Yes.
And long story short is I basically got fired and I had to find a job really quickly. And I decided that I really, like, as crazy as it was, that I wanted to be in international finance and be a financial psychiatrist. I was going to do that.
Financial psychiatrist. I love that.
So that's what my family has always called me. And I found an internship with a local financial planner in Baltimore and DC, which turned out to be 2 years of absolutely amazingness. And I loved his clients. I loved what he did. I loved his life. I loved the intimacy he had with his clients. I love, at that point, he was actually an individual that was South African, and there was so much apartheid and related things happening in South Africa. We were working with a lot of those clients to really help rebuild their lives and do it in a very focused, optimistic, capital-constrained kind of way. And I basically, so at that point at 23, 24, I said, this is what I want to do, but this is his business. I need to build my own business and to figure out who and what I am. I decided I was going to go to business school. I was a little young to go to business school. So I applied to, I guess, about 28 schools. I said I would go to the best one I got into. That was NYU. I got there basically the year after the tech boom. So a lot of the firms had figured out we're making all these people wealthy in our investment banks. What do we do with all that liquidity we're creating? Right. So everybody from Lehman to Goldman was creating these, private client services, private wealth management, and they sort of would say, if you want to be in investment banking, these are our numbers and our lead charts. If you want to be in, sales and trading, this is it. Oh, and if neither of those things apply to you, but if you really like finance and you like individuals and you have like some sense of EQ, there's this other thing over here. I was like, wow. And I was cold calling at Lehman 6 months later.
Oh my God. And so from Lehman, you went right to UBS?
From Lehman, I went to JP Morgan when, after the financial crisis, I had a lot of clients that needed a really safe, really quick play to go. When Lehman went under, I was a month pregnant. I was running an over-the-counter equity derivatives desk, so I was selling Lehman counterparty risk, so my life absolutely crumbled. And I needed, to this conversation, I needed a home, I needed a team, I needed healthcare, and I needed to help and rebuild my clients. And JP Morgan was just trying to figure out how to be relevant to this sort of next generation of wealth that they were the recipient of. I had a good run there, and then ultimately I moved my team to UBS about 3 years ago when there was so much good that was happening and that we loved about our business at UBS. And there were a lot of conflicts of interest about working at an asset management firm that was also a wealth advisor. So we spent a lot of time figuring out what our next stop was. And UBS really was sort of the holy grail of where they were, research platform, truly only global wealth management platform at all, relevance in philanthropy, optimists, an understanding of what needed to happen about women and capital well before the world was talking about those things. So it sort of became a no-brainer, and it's been amazing. And they've been huge proponents of both the way we run our business, the kind of clients we work with, and my collecting badass women clients.
You are pretty damn badass, by the way.
Thank you.
You are amazing, and look how long I talked to you. I could keep talking to you, but I'm pretty sure you probably want to have lunch. Yeah.